Hey everybody, Millennial Trader here from the Millennial Trader YouTube channel. Today is December 30th, second last day of the year of the month 2024. We're going to do a crypto market check-in, take a look at uh, several different coins: Bitcoin, Ethereum, Ripple, Solana, DOGE, AVAX, and PEPE. Uh, Incorporate a little bit of technical analysis as well as some of the institutional models that I use when I'm analyzing charts that the normal public doesn't have access to. We'll take a look at the Fear and Greed Index and then also look at the Bitcoin dominance chart to see if we can see anything on the horizon. Okay, so looking at the Fear and Greed Index, we're currently in a neutral area of 48, so roughly smack in the middle between extreme euphoria and extreme fear. It'll be interesting to see how the market shapes up going into the inauguration of Donald Trump, literally just a month away from now. And generally speaking, there hasn't been much activity or anything notable in the market to push Bitcoin in, or yeah, Bitcoin in any particular way, both up or down. So we're kind of just in a holding pattern, and probably a result of decreased trading activity as we end off the month and the year. So we'll see how things kind of play up. But right now, we're a little bit surprisingly, we're actually lower than what I anticipated we would be going into the inauguration. Previously, I had mentioned we would be somewhere in the greed to neutral area, and obviously we're much more lower on the scale towards neutral. Whether we actually go into the fear area, um, we'll have to wait and see. It could potentially be, as I mentioned in my last episode, in my last video, a potential sell the news event going into the inauguration, and in which case, maybe that might be the start of another um, crypto winter, but we'll see. Um, Generally, I do anticipate continued bullishness into 2025. And as we analyze some of the coins that I'm going to talk about, I'll kind of explain to you and go over where I see myself positioning from that perspective. So when I look at the Bitcoin dominance chart, obviously we're within the 50 to 60% range, as is typical for Bitcoin over the past year, and on a longer time frame, we see kind of it just generally being within this particular area up here. Obviously, the more dominance favoring Bitcoin, it's I would say in general considered the safe haven asset in the crypto space. So clearly, when there's fear in the market, you tend to have traders and investors gravitate toward Bitcoin because it's more reliable and more stable, and a proven concept. And then, of course, as as increased risk taking occurs, then you'll periodically see pops in the altcoin space. But right now, after quite a significant jump in late October into November, we have a short term pullback in the altcoins, and obviously that's resulting in um, an increased tendency or relative market share of Bitcoin trading. So we'll see if things kind of align up, as I was previously mentioning, whether we get closer to the fear area of the index, in which case I would tend to think Bitcoin Bitcoin's dominance will actually increase in that way. And whether we continue to see bullishness in the market, obviously that'll just increase the overall market caps of the space in general. So not really making hard to kind of say heads or tails in terms of where the market is going to, over the next couple of months, but the general tendency is that we're in a bullish environment, and we continue to be in a bullish environment just because of a lot of the macroeconomic factors in play with respect to Donald Trump and pro-business, pro-crypto. So, nothing to do as of yet. Obviously, Bitcoin's price is the more significant coin relative to any of the other coins in the space. So you'll obviously tend to see more volume in times of fear. You'll see more activity in the with Bitcoin from an overall market share perspective. So we'll see. Right over the past couple of weeks, the altcoins have kind of just been hanging around within 30 to 31 area. Ethereum, similarly, anywhere between 12 to 15% is generally where Ethereum kind of stays. And then the biggest component is Bitcoin, and usually you'll be able to gauge from fear and greed whether Bitcoin's overall dominance and presence is capturing a lot of the market share. So we're still in a bullish environment. I continue to be bullish. Certain of the coins, definitely I'm more bullish some of the other coins relative to Bitcoin, but we'll get into that in the next charts. All right, so I'm going to bring in my charts here. Obviously, I use symbolic. You have to pay a significant premium to utilize the services on a monthly basis, and interpreting the results takes a lot of time and dedication, which for the average individual, for the average retail trader, they won't know about understanding the different models and the different tools that I have running when I'm looking at the crypto space. So we have Bitcoin currently up. As I continue to preach in all of my videos, the utility of the DeMark indicators is something that is really hard to find in terms of other technical analysis indicators that can show up or isolate prospective exhaustion points in the market to anticipate market tops and bottoms. And this indicator does an extremely great job of highlighting those particular points. Just take for example, several weeks ago I mentioned that Bitcoin was coming up to a 9 and 13 exhaustion signal, at which point I would say I had said that these are potentially areas where you want to take note of, because they could potentially indicate turns in the market, and you may want to either start taking profits or looking to short in the opposite way. Obviously, we peaked at this 107,425 level, which I had also again indicated would be the potential topping point for Bitcoin, at least in the short term. And obviously, since we're now progressing towards a -9 count, currently on a -3, and we've breached this $95,000 hidden support level utilizing the propulsion indicator, which again is it measures the thrust in the market in a particular direction. And generally speaking, when you're in a bullish environment, as we have been for Bitcoin, any pullbacks to this level are considered areas of support, and depending upon how they close, suggests whether there's going to be continuation to the upside or if that ultimately results in further declines in the market. And since that, as I previously mentioned, I said, depending on how this closes, and this is the second week in which we've closed below it, then suggests to me that we're probably heading down to this 81,618 level. And interestingly enough, looking from as I use a simple technical analysis tool, just a trend line, an uptrend line from this low, and I'm using the low of the candle, and I'm choosing the candle where the lowest low relative to the left and to the right as my starting point, and then I connect it to the next low candle to ultimately create a secondary point and have the trend line kind of draw out that way. Unrelatedly, this 81,618 level happens to line up exactly to where the trend line meets. So this could be a potential area of important support. Let's take a look at Ichimoku clouds. And again, Ichimoku clouds is a Far East Asian indicator of utilizing both. It projects prices in the future, as well as the way in which the candles line up within the 5 lines provides important information in terms of whether there is important levels of support and resistance that we need to pay attention to. So let's put this on. And yeah, I mean, look, I have potentially three different elements or indicators that suggest this 81,618 level is notable. I have the uptrend line. I have this propulsion bearish exhaustion level down here. I also have first level of support, the conversion line of 87,005, and then the more longer term support line of 78,719. So within this area, potentially this is an area of important support where should it not hold this area, then we're potentially coming back down to this $60,000 level. Currently I'm not interested in putting on any new positions. As I previously mentioned, I was looking at 90,000 as a potential area of support, but obviously with one additional week of price action activity, the cloud is continuing to form out, and I'm probably now more interested in putting on a new position if we hit this 81,618 level. And I think the risk reward at that point is appropriate, because I have all of these different signals that suggest that this could potentially be an area where Bitcoin will kind of base at and then potentially continue to creep up above this uptrend line. So, again, the utility of this model having been created back in the 1970s, before computers were mainstream by Tom DeMark, it's a testament to how useful this indicator is, and there hasn't been much tweaking to the indicator since. And you definitely can't find this freely available. It costs a significant amount of money that hundreds, if not thousands, of institutions are utilizing because of how powerful and how informative the model is. So that's it for Bitcoin. I'm kind of looking, if you're really interested, you can potentially put on a short, and short at anything under 95,000 would be an appropriate risk reward. Having topped out at sequential 9 and 13. Those were effectively valid signals, and obviously the count will continue to look for completion of another 13 um, until we retrace all the way down to this $63,000 level, at which point the count will nullify. Okay, Ethereum. So in my last episode, I mentioned that I was starting to initiate a large position in Ethereum, and I continue to do so. But interestingly enough, this $4,000 level seems to be of significance or of major importance. Obviously, we've tested it 1, 2, 3, 4, 5, 6 times since Ethereum reached these levels back all the way to 2021, and we've struggled to get above it, so that's notable. I think so long as we continue to hold this 3,112 level, um, that's probably an area where I want to see how it closes before I want to continue to before I put on any further exposure. And then we've kind of just been trading within this large $1,500 range. It wouldn't surprise me if we come back to retest this $2,500 level, at which point I'd gladly add more, because I think uh, over time, at least looking into 2025, you'll probably get price improvement and um, relative outperformance in Ethereum versus Bitcoin. Again, because you need significantly more dollar volume to move Bitcoin, given that it's over, trades between $90,000 and $100,000. That same dollar volume applied to Ethereum would move the needle much more significantly. But obviously, there's difference in terms of the utility of the coins, with Bitcoin having a finite 21 million and Ethereum potentially having an unlimited supply, but it generates gas fees. It's different utilities, different purposes, and of course, some of the other altcoins are using the Ethereum network um, for their purposes. But I think overall, the utility of Ethereum um, is as significant as Bitcoin. But obviously, when Bitcoin started trading, differs in terms of when Ethereum first started as well. So there's a little bit more history in Bitcoin, and obviously, the, the Bitcoin maximalists will continue to harp that. They'll continue to be bullish no matter the price. I think that's valid, but I think it's also it's important to be tactical in terms of where you put on and put off take off trades, so that you don't have to sit through significant drawdown, and you could potentially outperform the market by utilizing a lot of these tools. So just again, for just to show how intuitive these models are, back in early 2024, when the sequential 9 indicator came up, that was a potential exhaustion point in the market to say, okay, we've moved up enough to now suggest that either there's a potential turning point in the market or consolidation. And obviously, from this point, over the next 6 months, it went down all the way to $2,000. So had you been able to utilize these models then, you would have saved yourself a significant amount of drawdown, and then you could have potentially put the trade back on, depending upon if you knew what these TDS signals were, as to whether or not there was going to be continuation to the downside, or if this was an area where you should potentially go long. And again, I also utilize Ichimoku clouds because it tells me important areas of support that effectively, half of the trading population is using in the non-Western world. And the indicator was developed, I would say, in the early 1900s, but I think its roots generated back to like the early 16th century, during the rice trade and spice trade of Japanese culture. So there is significant merit to the indicators, and obviously I'm not going to go into details today about how to interpret the lines, but this lagging line, so the lagging line is current price projected 26 periods in the past, um, shows you where price is relative to these support lines. And obviously the higher that the lagging line is above the support lines, represents a bullish environment. And right now we're just kind of in between these two bands where there's not really much happening. What I do like about the current level is that it's above the cloud, which potentially indicates potential support. So this 31,112 is meaningful in that it'll be right by the baseline, which is it's essentially a moving average using the midpoint of the last 26 trading periods as an area of support. And of course, unrelatedly, the bearish propulsion momentum level is an area that I potentially want to lean into for the potential upside of retesting this $4,000 price point. MACD still looks positive, so I'm not too concerned there. But it is notable that $4,000 seems to be a significant area of resistance, and we're currently on a -3 count, so there is potential for the price to flip. Price flip meaning the signal could potentially shoot back up to the upside, but we'll have to wait and see how next week closes relative to the December 16th candle. So for me, I'm currently bullish Ethereum relative to Bitcoin. I think there's more upside, and actually, I'll show you why I'm bullish Ethereum versus Bitcoin. So I'll take this off. I'll take the Ichimoku clouds off, but just looking at Ethereum relative to Bitcoin, utilizing both sequential and combo. For those of you who are new, sequential and combo are just sister models measuring momentum and trending indicators. And obviously, when you move in one direction long enough, you'll generate a 13 signal after completing a 9. And when you complete a 13, that is generally an exhaustion point in that direction. So if I'm looking here, we generated a 13, which is potential downside exhaustion. And since then, price for Ethereum has been slowly creeping back up. And this is one of the reasons why I continue to believe that Ethereum will outperform Bitcoin. So long as, let's see, 1, 2, 3, 4. So over the next several weeks, if we get above, on a relative basis, 0.039, then there will be a price flip, in which case we will then project to the upside a +1. So until that happens, we're still showing completed exhaustion signal, but it hasn't moved in the opposite direction to the extent where we see the price flip. But potentially next week that may change things, or in 2 weeks, that may result in the price flip, in which case then we would then start seeing a sequential +1 sell signal. And if I look at the Ichimoku clouds, so should we get above this conversion line, which is moving average of the midpoint of the last 9 trading days, then I could potentially see Ethereum getting up to this, on a relative basis, this 0.04 area over the next seven weeks. So that'll be great if that happens, and in which case my hypothesis with respect to Ethereum outperformance will in fact be valid. Obviously, MACD is starting to curl up bullish, so that's positive, indicating continued momentum. So we'll see what happens. Okay, so Ripple. So I previously mentioned I'm also bullish Ripple. I said that we consolidated effectively for 2 years of price in between 30 and 50 cents, and then as uh, the market started to anticipate Donald Trump was going to become the next president of the United States, along with some other Ripple specific news, we shot up almost 400% from 50 cents to 275. Right now we've consolidated back. I am kind of looking in terms of potential areas of support as to whether I want to continue to um, average cost my position, but we'll see where that goes. If I put on the Ichimoku clouds, realistically, if I'm looking at the weekly time frame, so we closed below this um, exhaustion level, which is notable. So that's a potential red flag. But I do see that the conversion line provides an area of support around $1.70. So that might be an area where I want to potentially come back into the market for the potential continuation to the upside. Um, Again, I'm still anticipating that this 50-cent area was the cyclical low, and I don't expect us to retest this area unless an exogenous event happens, which I don't believe will be the case. We effectively have 2 years of consolidation and 2 years of buyers accumulating that there should be enough demand to keep price above and potentially come back and retest all-time highs, which was what I was anticipating. Again, kind of retesting this 275 level, and then hopefully we'll see how kind of the trend develops, but to retest the all-time highs of about $3.35. So I'm still bullish. Obviously, MACD is also bullish. There's significant momentum. Yes, it's kind of tapering off, but that could just be this could just be the consolidation phase of kind of just where everything else is in the market. And I think I also was interested in Ripple because when I was looking at it from relative outperformance about a week ago, I did see um, Ripple kind of continuing to show outperformance. And yeah, so when I'm looking at Ripple versus Bitcoin, obviously Ripple had significantly more outperformance relative to Bitcoin just based on this candle up here, these candles pushing further up. So as you see price increasing, that means Ripple is outperforming Bitcoin, and as when it comes back down, that means it's Bitcoin that's outperforming. So I don't really see anything. I don't see any red flags at the moment. There are definitely areas of support. Um, I'm looking at this exhaustion level as one potential area, and then I think more notable areas of support are in and around um, this 0.18 area. That's probably where I want to continue to do more buying on a relative scale. And then the other thing going for it is, we're still looking for the completion of a 13 to the upside. We are on a combo 8, um, so that's notable. But I do think we should get the completion of the 13, which should ultimately allow us to kind of retest these wicks over here of July 2023 and then May 2021. So we'll see how that goes. Okay, so looking at Solana, again, in my last episode, I said I was I was not interested in Solana, and obviously, since then we continued to have price come back down. Again, the DeMark models are outstanding because these signals, the 9 and the 13 back here in 2024, told you exactly when the market was about to turn. And had you sold at this point, you would have saved yourself, over $100 in price decreases. Again, another 13 signal came up here from the completion of this 9 count here. This 9 count here. So again, that was potentially another area for you to, had you missed this opportunity, to potentially sell out at this point. And then similar to when some of the other coins that we've been looking at kind of started to turn around, that was in late September 2024. There were several weeks of signals to suggest that you could have potentially gone long the coin. And then again, obviously, most recently, there was an exhaustion 9 signal that came up, and since that point, we've just Solana has just completely collapsed. Almost what is that, 60 bucks? So it's significant. Again, I'm not interested in Solana. You'll see here potentially I have a horizontal area of support. That's significant because we have so many touches coming back to this area where that is meaningful support, longer term support that to me at this point in time should hold. I've drawn an uptrend line coming from this August 2024 candle. I've lined it up to this September 2nd candle, and this potentially could be another area of support at which point the coin could potentially reverse and potentially come back to retest. But I'm not really holding my breath because I also just see it underperforming Bitcoin, and if I'm looking just for outperformance at this point in time, Solana is not one of them. So let's take a look. So if I'm looking at the relative strength of Solana to Bitcoin, look, we're at a -5 count of 9, so potentially 4 additional weeks of Solana underperforming Bitcoin, which could potentially result in Solana touching this area of support underneath the cloud. If we break this area, then all bets are off, and I'm saying that Solana will probably come back to retest on a relative performance basis all the way down here at this propulsion exhaustion level. But we'll see. I'm not, for me personally, I'm not interested in Solana just because of the points that I mentioned. It's significantly underperforming Bitcoin, and MACD is also, the momentum in MACD is also to the downside, and the bearishness is increasing. Okay, let's take a look at AVAX. So I recently sold my AVAX position because I mentioned that there was this area of support in the cloud, utilizing the cloud model, that I said if it breaches it, then that to me indicates that AVAX is weak and we're potentially heading back down to this $31 level, $31.68 level. And since then, and again, I continue to just, there's so many signals from the DeMark sequential model that told me, weeks before that this was a potential turning point. So the 13 came up here. That was and obviously had you recognized that signal, you would have been able to take profits and sell out of your position and not have had to deal with the drawdown of 20% since, again, back in early 2024, the market moved enough in one direction that +9 came up, at which point after that, from the $55 level, it went down to $20. So you would have saved yourself 50% drawdown from that trade as well. The only interesting thing right now is that, or notable thing, is that MACD is still bullish, but obviously the the curve is starting to come back down. So it wouldn't surprise me if this then starts to cross bearish, and the momentum continues to develop as we see that the candles here are um, starting to go down as well. So I took a small loss on this position. Um, it wasn't a major position. It was under like $500 just because I wanted to see where it would go, but obviously the trade didn't work out, and we're all human. We all make mistakes, but next time I'll have to. I should have recognized that the signal up here was valid, and I think I was just feeling a little bit of FOMO during the time when all of the crypto space was in euphoria. So, learning point. I'm not gonna beat myself up about it. Take the small loss as a learning lesson and kind of move on and look for the next trade. Okay, let's take a look at Doge. All right, so in the last episode, again, I mentioned that, okay, so two notable areas. So a 9 signal came up. This 13 signal down here was a bit early. Um, and so, again, looking at how the candles were forming back here, um, you could have actually recognized that this was not potentially an area for you to sell out at, just because the lagging span had not breached this area of support, in which case that was a valid signal for you to continue to build your position or go long completely. And obviously, had you recognized that signal, you would have been able to enjoy almost 100% gain from this point in time. But since this setup 9 signal printed, we've dropped almost 20 cents, actually over 20 cents. No, 20 cents. And I said we need to take watch of how Doge closes relative to this um, bearish momentum level, because if we breach this hidden area of support that utilizing any modern day technical analysis tool you would not have seen, that would then signal to me that it's no longer viable for you to continue to hold Doge, because you're most likely going down to 28 cents. And especially because we're on a -3 of 9 count, I would then potentially argue that we could potentially go back down to this 15-cent range. And again, I wasn't interested in putting on any positions in Doge, just because I did recognize the 9 signal back here, and I knew that we were looking for the completion of a combo 13, which I wasn't exactly sure when it was going to come up. I just knew that it had to be above a certain level for the count to complete. But I saw that this 31-cent area was not something that I was interested in potentially entering a new position, and I would much rather wait for the opportunity to buy it at a lower price in and around this 15 to 20 cent area, where the risk reward is more favorable, because you have this significantly long-standing support line from the top of the cloud, and at that point you would have gotten it at a price that people in January of this year had gotten in at. So that would have been a much more favorable risk reward position. And obviously the steepness of the MACD now having dropped significantly in price is also another indication that you don't want to be in Doge. And what's interesting is if I look at Doge relative to Bitcoin, similar to what I was mentioning previously, um, it's it's underperforming Bitcoin. Yes, there was a period of time where it outperformed Bitcoin, but now it's underperforming by in a significant way. And if this support level from the baseline doesn't hold, then yeah, I could potentially make the case that we're going down further, at least to this bullish momentum level, and then all the way down to this the top of the cloud here. So for me, I'm not interested in Doge. I think there are better opportunities elsewhere in the crypto space, and I would stay clear from it. Okay, lastly, let's check in on PEPE coin. So I tend to look at different exchanges from time to time just because I know certain exchanges adopted coins earlier than others, and so you have a little bit more price history. So, for example, uh, on Coinbase, it looks like Coinbase only adopted Pepe coin back in November, and so you don't have too much price history. But on Kraken, for example, which is a platform that I currently use to trade, it looks like Pepe was incorporated back in 2023. So a little bit more price history, a little bit more price data um, to see and interpret where we go from next. So Pepe had a significant run, similar to when all the other coins had their run late October, peaked in early December, and we're kind of just hanging out in between these two um, moving averages, the conversion line and the baseline. So long as we continue to hold above um, the baseline, that to me, yes, even though we're on a -3 count, there's enough support to suggest that we could potentially grind back up. Now, I'm not necessarily ready to make that call, but we might have to take a further deep dive on a lower time frame to seek a little bit more information in terms of the DeMark indicators. So yes, ever since about mid December, we've had this significant area of cloud support, and obviously, and notice how it never breached this area. Um, it never closed above the bottom of the cloud, which is notable again because uh, that was an area of significant support. Yes, we breached it temporarily, but we ultimately closed above this cloud area, which to me is notable and is I guess is healthy in terms of continuing to hold the coin going forward. Um, as we get into January, so long as we continue to hold above this area of support of 0.00001675, I would continue to be long because the completion of the 9 count stopped at exactly where the cloud formed, the cloud bottom formed. It didn't retrace this entire move. Again, we're getting into another area of um, important support going into January, where the support level will move up. And um, for me personally, that would then result in the MACD potentially moving up, curling upward, and potentially looking favorable. But again, we've just kind of just been consolidating in and around this area um, since I guess middle of December. And again, I think it's a lot of the trading activity that you're seeing right now is really just a reflection of decreased liquidity because people are on vacation, algorithms trading within a range. Um, so there's really not much to do other than if you're in the coin, I would say continue to hold because there's nothing glaring that would suggest to me that you need to exit the coin because there's further downside. The fact that we've held this important area of support underneath the cloud for so long suggests to me that the risk to the downside is minimal at this point in time, and I would actually continue to add as the further we move into January. Oh yeah, and interestingly enough, so again, I can't harp enough on how amazing the DeMark indicators are because we got a 13 signal right here. A 9 signal came up previous to that in early November. So those were areas where of points of inflection where you could have taken profits, you could have potentially shorted um, the coins if you had the ability through your exchange, and potentially have taken advantage both on the upside and the downside. Um, and it's the interpretation of the candles relative to these 5 lines is how I go about determining where I want to put on trades or exit trades or take profits. And I continue to advocate to anybody to continue to learn about Ichimoku clouds. The person that taught me, I indirectly learned from. He's a Wall Street veteran, over 40 years in the street, having held significant positions on Wall Street, major financial institutions, and investment firms. And so I trust the logic that he instilled upon me with significant importance, that the tools that I'm showing you are right more often than they are wrong, and they do a better job of any other indicator in the market currently or any other proprietary, freely available proprietary indicator to tell you when there are turning points in the market, when to potentially scale out, objective levels of support and resistance, that there's nothing else available today that can do that with such precision. So that's it for me today. I'll do one final recap tomorrow, given that it's New Year's Eve, just showing you my thoughts in terms of where we're going into January. And with that, I'll conclude the video there. Thanks for watching. If you like the videos, hit that like button, subscribe, comment below if you want to see any other analysis on other coins. I am in the process of developing weekly stock market reviews, and whether I'm going to take a look at on an index level or looking at individual stocks. I haven't really determined that just yet, but those videos are coming. And if you want to learn a little bit more about me, my website is on the channel as well. I'm currently building out a subscription portal for anybody who wants to subscribe to some of my newsletters in terms of regarding crypto or I guess longer term stock market investing, where I take components of the S&P 500, and I tell you tell you which ones uh, to potentially consider investing in for potential outperformance relative to the S&P 500. And I do have a track record so far of performing exceedingly well, taking only one trade a month at the beginning of the month for that particular product. And I will develop one for the crypto space for those that are more actively trading, um, and we'll go from there. But thanks a lot for tuning in. Uh, we'll call it a wrap, and Millennial Trader out.